All right. Hi, everyone, and welcome back to my channel. Today, we are talking about what to do if you've gotten money from the Paycheck Protection Program. If you've applied to it, you got the money, you might be thinking, yay, which I'm also thinking, yay, I'm so glad you got it. But now it's like, okay, what do we do with it? Because you've got to jump through the right hoops in order for that amount of money to be forgiven. Here's the thing with the Paycheck Protection Program. It is a loan unless you get it forgiven, but in order for it to be forgiven, you need to jump through the right hoops. So that's what I'm going to help you with today. If that sounds good, keep watching. And while you're here, please go ahead and subscribe to this channel because this is the type of information I want to be bringing you, things that are helpful and relevant. And comment below if you like this, give it a thumbs up. If you like it, give it a thumbs down. If you don't, I want to give a caveat to say this is recorded on April 12th, 2020. So what I'm saying right now could potentially be irrelevant or not relevant for the future if the Treasury and the government comes down and provides some more rulings around this stuff. So I'm going to tell you with the information that I have today, what I believe to be true. And please make sure that you fact check me. Please make sure you look at the most updated rules. I will try to keep this video updated because this stuff is extremely time sensitive. One day is different from the next day. We get new clarity as time goes on. So keep all the more reason to subscribe, really, because if I do an update, then you will know. And that's what I'm here to do, inform you. Okay, so Paycheck Protection Program. You kind of know what it is because you applied for it, but you might not necessarily know exactly what needs to be done in order for you to get that loan forgiven. So now that the amounts are starting to be funded, like this week, next week is kind of when the stuff is starting to roll out, I want you to make sure you know what you need to do. So what can this money be used for in order for it to be forgiven? It can be used for payroll. I'm specifically talking about wages and salaries, tips, commissions, that type of stuff. It can be used to pay that, whatever you've been paying employees, not independent contractors. That's a really big deal. Do not use this money and expect it to be forgiven for your independent contractors. This is for employees and trying to keep employees paid. And part of the reason, just like step back a little bit and think, why is this program being rolled out? It's because the government does not want all these people going on their state unemployment systems, okay? So if they're staying employed with you, they're not going out and getting an unemployment, okay? That's the whole point of this. So just keep that in the back of your head, okay? What else can this money be used for? Employee benefits, things like health insurance, dental, vision, maybe you do like some sort of supplemental life insurance, that type of thing. It can be used for all of that. It can be used to pay for retirement contributions in the period. It can be used to pay for also state and local employment taxes. What it cannot be used for, as we know it right now, is federal employment taxes. So FUTA and FICA, fun stuff, it can't be used for that. So that will have to get excluded at the end of the day, okay? Other things that it can be used for outside of payroll is mortgage interest. If you own property for your business, the interest portion is potentially included in this. Not a whole lot of people own their own buildings for small businesses, but if you do, that's a plus. This is not talking about your home mortgage, okay? Rent, it can be used for rent. Now, you do need to have a current lease agreement in place as of February 15th, 2020. So you can't go out and try to rent a new space and try to cover the rent on it, okay? That's not the purpose of this. This is not a growth stimulus package. This is trying to help you maintain status quo of where you were, okay? And then utilities, same thing. Any utilities that you had in place as of February 15th, 2020, you can pay those bills, okay? All of those things combined together do allow you to have that amount forgiven. Now, one of the big caveats and all that is that 75% of your loan amount needs to go to paying payroll costs directly, okay? Payroll costs include the salaries, wages, employee benefits, health insurance premiums, and state and local taxes, okay? So if you get $100,000, $75,000 of that needs to be spent on payroll costs. this is kind of a big deal, okay? Especially if you've been in a situation where maybe you furloughed employees and you need to ramp them all back up and get them back on payroll. You need to do this quickly because you need to start paying them, okay? So I actually, one of the big things for me is I feel like this is very time sensitive because the clock starts on your 8-week period to spend this money once you receive funding. So if you receive funding on April 13th, you have 8 weeks to spend it, which ends up being like something like June 6th or 7th or 8th or something by the time that 8-week period ends. So you have a certain number of payroll cycles that happen during that time, and we need to make this happen, okay? You need to spend the money. Let's see here. The other thing you need to do is you need to keep your staff levels similar. Or at the same level. So again, remember, we're trying to maintain status quo of where we were. So whatever your staffing level was as of February 15th, 2020, you need to make sure that by June 30th, your staffing level is similar or about the same, okay? It's unclear right now whether or not they're going to count full-time equivalents or if they're just going to do, you know, hey, you had 20 part-time employees on February 15th, and now you have 20 part-time employees on June 30th. So therefore status quo, you're good to go, check the box, you're fine. Okay, so we're still trying to get really clear on whether we're talking about full-time equivalents or we're talking about number of employees. I've heard both sides from pretty credible sources, so stay tuned for that. And, you know, talk to your HR professional, do your own research, make sure that you are clear on that as well. And let's see, okay. So we've already talked about keeping the level of payroll and the number of staff. Okay, so the big thing is in order to spend this money and kind of plan for this, I feel like it's really important for us to have a budget. A budget, let's plan the costs and strategically make sure that they get out in time, okay? So I decided, hey, I feel like I might not know how to do this in my head just off the top, and I might like overestimate what my utilities were, or maybe not remember the exact level of my payroll. So I feel like getting things into a spreadsheet is super helpful. So I went ahead and created a spreadsheet for us to use. You could download it in the comments below. I just feel like spreadsheets are really helpful. So, but I'm a numbers gal and that's what I do. So I'm going to go ahead and share this with you, and then we'll walk through kind of how to use it, okay? So this is the spreadsheet that I've created, and I've went ahead and just kind of put in some example data. So the way that this is set up is you start up here with an input your total PPP loan. So I put in $75,000 here. And then anything in that either doesn't have a color or is colored this teal color, you can do an input. Try not to touch anything in the gray because those are formulas and things that you don't need to touch. There's a lot of like if statements and things like that. So let's just say you got into your bank account $75,000, and we're just going to round it to make it easy. You need to keep your minimum payroll. So the minimum payroll to get the loan forgiven is 75% of that. So 75% of 75,000 is 56,250. Okay. So this is our target number. And let's say, so I went here and I said, adjust this to the date of funding. So I typed in 4/13/2020, and then this is all just adding 7 days to that. So this is your 8 weeks, your 8-week period. So we're kind of going to do just sort of a like planned out budget. Like this is our budget here. And then this is kind of your plan or your, or you can put in your actual as time goes on. Okay. So I'm going to go ahead and create my budget, and I'm going to say, my payroll, you know, this is the thing. We based the PPP number off of what our average payroll was in the past. So technically about 2 months of payroll, if you're paying out 2 months of payroll, you should be reaching that 75%, 75% figure. You should be reaching that. Okay. So I calculated what my average payroll was $30,000. So that's what I told told my bank my average payroll is 30,000. We calculated 2.5 of that was 75,000, and that's what I got funded for. We're just using this as an example. So I'm going to say, okay, my 2 month, basically 2 months, 8 weeks is about 2 months. My 2 month payroll is about 60,000, twice the average payroll. Okay. And that 60,000 is over my minimum payroll amount. So that's good. This is what I'm planning to spend. Okay. That's my target, my number. And then I'm like, okay, yeah, I have like health insurance premiums, of 10,000 for my employees. And then I do a little bit of retirement contributions, and, you know, I have rent, that's 2,500 a month. And so here I am. Okay. And then I have some utilities. So this is my budget. I've created my budget. And then I've kind of summed up everything. So this is kind of what I'm thinking, like, oh yeah, I can definitely spend all this money, because when I sum all this up, it's almost 80,000 and I've got 75,000. So as long as like I can execute on my budget, then I will be fine. Okay. So I want you to take some time to think about these numbers. Like, what do you actually anticipate your payroll being for the next 8 weeks? You know, if you haven't had to lay anybody off, that will be much more predictable than if you have laid people off and you're trying to get them back on payroll. Okay. Caveat on that is you also need to keep people's, so sometimes people, when a crisis like this happens and there's a lot of uncertainty, sometimes if you have salaried employees, you're going to be lowering everyone's salary. So say you take, like, everybody gets a 10% pay cut or everybody gets a 15% pay cut. In those situations, you know, make sure you take that into account here. You can't cut people's pay too much, because then you're not going to be reaching your minimum payroll amount. Okay. Keep that in mind. Okay. So as time goes on, you're going to start recording things. So maybe like in week 1, you paid out, you know, a utility bill of $100, and, you know, maybe every 2 weeks is your payroll cycle. So you're like, okay, I know that my next week's payroll is going to be 12,000, but I'm rehiring somebody that I furloughed, but by week 4, they're going to be back on. And then I'm hiring. So maybe by week 6, there's a little bit more. So you'll see I added about 2,000 each time. So I'm kind of ramping my payroll back up. And then, you know, all this kind of comes to a head at week 8, and my total payroll cost is 57. Remember, I'm just making up numbers here, but this is all kind of based on like an actual, like, average payroll amount. We submitted average payroll of 30. So this is a realistic example. Okay. So all of this is saying, okay, you know, some of that, that's great. Okay. So we are, oops, I need to fix something real quick. Maybe we can pause. I'm gonna fix this sum here. All right. So we're going to fix that. Okay. Because I had added in a couple extra lines here to my spreadsheet. So payroll across the board is 57,000. And then I have maybe 2 payments of health insurance during the time. And then retirement contributions are happening after payroll. So those go out monthly, retirement contributions in week 4 and week 8. And so when you sum up all of that, this is our total payroll costs of 71,000. And so this spreadsheet is going to tell you, should the loan qualify for forgiveness? And the answer is yes. So what it's doing is it's comparing these payroll costs to your 75% threshold. And then it is saying, well, how much is forgivable? And, you know, we're sitting here summing all of our, what we call like allowable expenses underneath this plan. We're summing everything together, and we're actually spending $76,700 on all these allowable expenses, which is less than what we budgeted for, but still all of this is, you know, this ideally is what we're putting in as actuals. it's more than the loan amount. So that's fine. That just means that we can get the max amount of the PPP loan amount. We can apply for all of that to be forgiven. Okay. So if we say how much is forgivable, only up to the amount that was loaned. They're not going to give you extra money if you spend extra money on, rent or utilities or even payroll costs. They're not going to give you any more money back. But all of that is forgiven, which is huge. This is free money from the government, not even taxed as a gift or anything. No capital gains, no, like, you don't have to include this as income, nothing. Like, this is just like amazing. So if you can get this, please, please, please do. Okay. And then the loan amount after forgiveness, this would be in a situation that maybe, let's say you didn't have any health insurance for your people. Let's just say you didn't pay health insurance at all, okay? So in this situation, the total allowable expenses are not as much as the PPP loan. So you're gonna, your allowable expenses are less than the total loan, so the remainder is going to turn into a loan, okay? So if you've left that money, that, $75,000, and you used only the money for the allowable costs, technically you would still have $8,300 left in like some side bank account or something like that, okay? But if you did that, then you could just pay off the loan with the remainder of that money. Or maybe you use that money for other things in your business. Maybe you did use it to pay independent contractors, or you did something else with it in that situation. Then it would just become a loan, okay? And here's the term. So real quick, I wanted to correct a statement that I made. See, already I had said that with the PPP money, it is whatever is remaining that maybe is not part of the allowable cost, that the remaining amount turns into a loan. That is not correct. It is a loan from the very beginning, okay? This is a loan from the very beginning, and you can apply for forgiveness after your 8-week period ends. That's when you can apply for the forgiveness factor, but there is an interest rate. It's 1% annual on these loans, and just the remaining amount that doesn't get forgiven, that part you will have to repay. That is a true loan. So the whole thing is a loan from the very beginning, okay? I just want to make sure that that's really clear. Okay. And here's the terms. It's a 2-year payment term, 1% interest, which is a very good interest rate, 6 months deferment. So you don't have to pay. So it does accrue interest during the 6 months, but it's 1%. It's not very much. But then you don't have to pay on it for pay any principal for 6 months. Okay. The big thing about this loan is that it's a 2-year term. That is very short. So if you, for some reason, can't meet these thresholds and you have a really big PPP loan that does not get forgiven, 2-year repayment is a very short repayment term. So you might need to consider refinancing it, or you might need to, if you ended up spending all the money on other things, which would be unfortunate, you are going to be in kind of a bad place. So if you don't use the money for the intended things, hold on to it and just repay it. Repay the loan. Okay. That's my advice as a CFO. Okay. I don't want you to get stuck with a really big loan in a 2-year term, because that's a lot of money to be repaying back really quickly. Okay. You don't want to default on these loans. They are backed by the government though, which is great. But yeah, we just want to be responsible with the money that we're given. Okay. Let's see. Okay, so let's just kind of play out a couple scenarios here so you can see how this spreadsheet works. So let's say that maybe your payroll was really, really small because you furloughed all your employees, okay? Really, really small on week 2, but then you were able to get people back. Maybe you even like gave them some sort of like signing bonus or something to get them back on. To get them back onto payroll. And so let's just say that you're back up to maybe 12,000 by week 4. And then let's get you, let's see, maybe back here. Okay. So this is a little bit scary to me because I'm thinking, okay, if you've laid off workers, you need to get on rehiring your employees ASAP, because it takes a while to ramp back up to a full payroll cycle, and you're going to need to spend this money. So please don't delay on this, and please, do what you need to do to get these people back on board. Now, in this situation, I'm still meeting the threshold because I do make these retirement contributions of $4,000, and then my payroll was 53. So I'm just squeaking over the minimum payroll amount, and the loan is forgiven, or should be forgivable. And how much is forgivable is here, okay? And then the remaining amount would convert into a loan. Now, the thing that this spreadsheet does not take into account is I am not counting your employees in this. So if you had 12 employees as of February 15th, and then at June 30th, you only have 6 employees, even if you can meet the other thresholds, it's going to diminish the amount of forgiveness that you can have. Now, from what my understanding is like if you have 50% of the employees, then you would get 50% of the amount forgiven. That's what I've understood. However, still waiting for more guidance on that. So use this. The way that I've set this up is that I've given an example here, and then I have this blank one, so you can put it up here. Maybe you have a much smaller payroll. Maybe your total money you got was $8,000 from the PPP loan, and maybe you're just trying to spend $1,600 or $16,000 in payroll. Maybe you have no rent, but you have a little bit of utilities. Maybe it's $600 in utilities. And in this situation, you're going to want to, continue on making sure your payroll is about the same. Now, this might mean that you might need to pay people for doing no work. All right, so here we are on this is an example page. So this is something that we can fill out. I went ahead and put in average payroll. My dog's clip-clopping around. So if you hear a little sound, that's what's going on. Average payroll of $8,000, which would, well, if your total PPP loan was $20,000, then that would make your average payroll somewhere around $8,000. And so I'm going to go ahead and put $16,000 in here for the payroll budget. Let's say you don't have any health insurance, you don't have any retirement contributions, or really anything else. And then no rent, and you just have a little bit of money for utilities. So all these things are basically coming out to a total of $16,000 is what you think you can actually spend. So you know that you might not be able to spend all of this money. So, you go through and you run your payroll as normal. So maybe you just do a monthly payroll. So that's going to be 8,000 and then another 8,000. And let's say that maybe you had a little bit higher utility bills than what you thought, just for example. And so this is going to say, do we think that this amount is forgivable? Yes. How much is forgivable? This total amount, and then the potential loan amount after the forgiveness. Okay. Remember, if you don't use this money, just take that pot that you haven't spent and pay it back if you want to do that, or use it to do, good things in your business so that you can repay this loan on the right terms when it comes due. Okay. You can do whatever you want there. So a couple things to keep in mind. Make sure that you have your documentation in place for every single number, okay? Every single thing that you want to claim as a potential, forgivable amount, make sure that you have documentation for it. So that means payroll reports coming from your third-party payroll processor. It means, bills for your utilities, and you need the bill and the payment evidence, okay? Because you can get a bill, but that doesn't mean it's been paid. So make sure you have the bill side and you have the, the check or the ACH or the electronic payment. Maybe it's on auto pay. Some things just have some sort of evidence that you got the bill, you owed it, and it was paid. Okay, make sure you have both sides of that. Same thing with rent. So if you don't have a statement from your landlord that you're paying off of every month, then you need to show your rent agreement or your lease agreement and the amount you've actually paid, okay? some sort of documentation that says this is the amount that's legitimate that was owed, and then some sort of documentation that shows that it was actually paid. All right. Same thing if, say, you do health insurance outside of your payroll provider, you probably have some type of bill from your health insurance for the premiums due. Make sure that you have that, and then you have your check that you're writing to the, or just, you know, your check stub, or maybe a digital image that shows that it cleared the bank for your health insurance, okay? Now, something that might happen is we're not quite sure whether or not this is going to be on cash basis or accrual basis. So if you send a check to your health insurance the very last week of the month or your 8-week period, but it doesn't get cashed in the 8-week period, is that included in payroll costs or not? We're going to assume yes, because we've written the check and we've sent it off, and we need to have documentation of that. However, we don't know the rules around that just yet. So I would probably just try to get it spent in cash in the 8-week period to be safe. If you have some sort of digital pay option out of your bank, that might be a good way to go. I know if you're doing like e-checks, they actually take the money out on the day that you are paying it, and then they write a check and send it to whoever. But you can clearly see you know, that it's taken out of the bank account and it's right there. So you might need to get a little bit creative with how you're paying these things. Don't send checks that might not get cashed for a really long time, is what I'm trying to say, okay? So try to make sure that that money actually gets out of your bank account so you can claim it. But the biggest thing is the payroll costs, because even if, you know, maybe a rent check doesn't get included in time to be forgiven, I'm not so much worried about that, because that's going to be a smaller amount. Your payroll amount is the really key part, and you need to make sure that you get that, you know, you hit that 75% threshold. Okay. That's an example for you. I hope that's helpful. You've got documentation, you plan for it with a budget, and you keep track of it over time. I mean, seriously, fill this out every single week and keep track of things, and start to be strategic and figure out what you need to do to hit these thresholds, okay? You got this. I'm here to help. If you want to reach out to me, please do. You can book a strategy session with me, or you can book a discovery call if you're interested in ongoing services. I'm happy to help you fill this out if you need any help with it. I'll put links in the comments below to how to book a call. But the biggest thing is make sure that you subscribe to this channel so that you can get more information like this. And then if you want this spreadsheet, there is a link to download it in the comments below. So make sure you check that out too. All right, well, everyone stay safe, stay sane, use your PPP money wisely, and get it forgiven. That will be awesome. All right, bye everybody. Thank you.